Hey guys, how are you? So let's cover today's editorial analysis of the newspapers, mostly focusing on the Hindu, and apart from that, the other newspapers and relevant articles from Live Mint in Indian Express and EBW magazine. So today is 19th January 2017, and this video lesson will be, of course, presented to you by me, Dipanshu Singh. You can read more about me on the slide. You can go and click this link or copy paste this link to follow me on an academy and get updates on my courses and on my videos. So today, nothing from the Indian Express, three articles from Live Mint, very good articles, and one only from the Hindu. So people who only read the Hindu might be feeling really happy and relaxed that nothing much in Hindu, but then other articles are also important. So the our question answer writing practice will continue with this, and the question for today is regarding Jallikattu. So a lot of uproar happening in Tamil Nadu, which has been termed as the Jallikattu uprising or the Tamil Nadu uprising. So without any bias, please mention your answers in the comment sections on the Unacademy Discuss page regarding the ethical principles and arguments involved for both defending and against the ban on Jallikattu. So the first article is regarding lessons in education from the Live Mint. So this is regarding the PISA, which is the Program for International Student Assessment, which is run by an organization run by OECD. So this is a one-of-a-kind global survey of student achievement in schools, which is conducted every 3 years, and it's considered as the gold standard and the global standard in assessment for educations. Singapore, Finland actually rely mostly on this survey, and they are considered to be the best among, and they have the best educational system in the world. So the advantage of this survey is that this is widely available and it is rigorously conducted, and the PISA 2015 findings focus specifically on the abilities of reading, science and maths. Apart from that, 72 countries participated in the surveys. So what were the observations of this? So the first one is that there is clear and unambiguous reaffirmation of the fact that private schools do not perform better rather than the public or government schools. So this is a wide misconception, and this was actually done after taking into account the socioeconomic status of the students. So this is similar to the findings which we which we came across in the learning deficit series of the Hindu. So if you go and look at those articles which we covered in December, from 12 December onwards, you can find a lot of similarity and in context with India. Second is that separating students based on vocational and academic streams early and grade repetitions can actually do not do any good in their score improvements. The third one is relating to school choices. So the school choices mechanism actually foster inequity. And the fourth one is regarding gender equity approach. So generally this gender-based and gender-biased discrimination happens at school, and this gender equity approach should be followed in school, because the performance decline is not because of any innate abilities or inabilities, but rather due to external factors. And the other one is that there is no evidence of improvement in performance by using information communication and technologies. So not much of improvement if you look at the ICT usage of ICT in regards to education. Then the teacher qualification experience are the important factors and influences students' performance, and greater autonomy to schools has positive correlations to performance of the students, and even science scores improves with the high quality of teaching and the learning process. So there's a direct correlation with the importance of teachers and the time they spent at school. So similar findings from the annual survey on education report by Pratham NGOs. So this came in today's Hindu, so I thought I'll add it in the editorial analysis for a comprehensive view on educational status. So the findings of the survey is that the overall learning level in the country is pretty disappointing. So the observations that the reading, for the case of reading, proportion of children in class 5th who could read a class 2nd level textbooks, declined to 47.8% from 48.1 in 2014. Similar is the story with maths performance, declined to 43.2% from 44.2 for class 8 students. And then English, 32% in class 3rd could actually read simple English words. But then for class 5th student, 1 out of 4 could read only or could read an English sentence. So this is not a good news. And there's also no changes post implementation of the Right to Education Act post 2009. So what are some of the positives of this survey? So there is slight improvement in the English and maths level of class 3rd students, and the government schools are doing better, and the grades are improving for class 1st to 3rd. But the problem is the faltering of performance in the senior classes post class 5th. The enrollment ratio for the age of 6 to 14 has improved to 96.9%. And also the good news is regarding the usable toilet availability is rising 68.7% from, if you compare, to 47.2% only in 2010. Then nationally, there's no increase in private school enrollment, so that again confirms the viewpoint that the government schools are also doing pretty well. And the other issues involved are that most rural schools still do not have computers. Only 20% rural areas have computer availability. Kerala tops this list with 80.89%, and 75.2% in Gujarat have the maximum number of computers in rural areas. And the other dismal information is that the dismal performance of states like UP, Rajasthan, Chhattisgarh, MP, where out-of-school children are increasing in numbers. So there needs to be a policy focus on bringing children back to school in these states. The next one is how e-payments can prevent cartelization. This is again an article from Live Mint. So basically, shifting markets from the informal to formal sector can have several advantages. More importantly, when you move to cashless transactions, especially in mandis or APMCs, more of the people, more people will come under taxnet, therefore reveal the presence of cartels. So digital payments basically force markets to modernize. And if you look at the recent cases, there was one a case which was mentioned for 2010 where there was an unusual rise in the prices of onions, and then there was an independent inquiry set up by commission which could not found any material evidence to impose Section 3.3 of the Competition Act because the data source used for investigation was of APMC, which was not reliable, and the data gave no info and no direction on the pre-auction between farmers and traders. And due to time lags and data distortions and corruption and collusion between officials, the data is generally not reliable. So how e-payments can usually help in this? So better record of floor price and at the time of auctioning, which is presently fixed earlier by pressures from traders on the farmers due to debt and loan, can actually help in this. And then Arthiyas, which are commission agents, are the main source of info. And once you use digital transactions, the transaction will be recorded, and it's difficult to alter them and also delete them. And by juxtaposing, that is by combining the weather-based data with the variation in patterns of the price, can actually pinpoint if there is a cartelization or presence of cartels who is manipulating the prices. And Section 3626 of the Competition Commission Act empowers the Commission with the same powers as of a civilian court, and the Regulation 41 allows them to for admission of records like mobile and email to ascertain evidence, and also the Section 41 allows them the permission to conduct raids. And finally, cartels will not end with the digitization because it's such a big industry, and it's such a huge and humongous issue because we need to reform the APMC, and because APMCs are under state government controls, and different state governments have their separate issues. But then moving to digital economy and digital transaction will certainly make the cartelization a more difficult process to hide. The next article is regarding the focusing on the marginal farmers from the Hindu. So basically, a marginal farmer means a farmer cultivating as an owner, a tenant, or a sharecropper up to 1 hectare of land, and small farmers is the one cultivating from 1 to 2 hectares. So together, small and marginal farmers in India account for 44% of the cultivated area. So if you look at the case study of Punjab in this article, there are various reasons for farmer suicides because of the cotton crop whittled by whitefly. Basmati's market, they have declined, and there is a high rate of money lending. And according to the NCRB data, the suicide rates of marginal farmers is actually less than that of the small farmers. And if you look at closely, we find a different state-wise trend. And if you look at the cash crop intensive states like Maharashtra, Karnataka, Telangana, on contrary, generally they have a higher rate of small farmer suicide. So basically, the farmers in cash crop intensive agriculture is more prone to suicide. Overall, in India, dependency on cash crop is much less. So all India, suppresses the state-wise trend. But then why should we discuss suicide? So because if you look at the NCRB data, and we have covered this in the previous editions of the Hindu Summary as well, where we covered an article from the Indian Express, which confirmed that most of the suicides, the farmer suicide in India, are not because of the pressure from the money lenders. They are generally more accommodative. It is because of the pressure from the banks and the banks to the self-help groups to extract out the money with interest. And if you look at this finding as well, it confirms the present finding of the NCRB data that it is the farm debt and not the crop failure that leads to farmer suicide. So in order to save precious life in already unattractive farm sector, the policy priority should be to farm debt and rather crop insurance only. And in Punjab, monoculture of wheat and pay with rising input cost, fertilizers, crop protection, chemical seed, farm labors, and equipments actually make agriculture unviable. And if you look at the example of cultivation of wheat, which rose 3 times from 2004 to 2012. And so what all is needed to address this? So first of all, inclusive approach is required by a combination of chemical, biological, mechanical, physical means to combat pests with long-term aim of reducing dependency on pesticides. And for this, you can emulate, the government can actually emulate practice of biological pest management as done on the rice field and paddy cultivation in Vietnam by use of predatory beetles. And also rice farmers there adopted a no spray early rule, curbing insecticide applications within the first 40 days of rice planting. Then there should be reforming of the farm equipment policy with local manufacturers and subsidy under the Make in India scheme. And for institutional financing, there should be an early warning signaling based on data of farmers who had fallen into on vicious cycle of unsustainable loans. Then there can be village-wise lists of deeply indebted farmers, which must be prepared annually to identify farmers on the flight path to penury and potential suicide. And then obviously the regional banks, regional rural banks, and NABARD, along with local administration, should be tasked for creating macro and micro policy interventions based on the list of vulnerability of suicide-prone farmers, thus devising timely loan restructuring. And finally, the government should show solidarity, seek participation and inclusion of small and marginal farmers to reinvigorate the agriculture in India. The last article is an interesting article, a little complex article discussing about the possibility of a digicoin similar on the lines of bitcoins, which can be issued by the RBI. So a report of the Committee on Digital Payments notes that several benefits of introducing a central bank digital currency, somewhat like Bitcoin. So it concluded that the discussion by recommending that the RBI evaluate the possibility of an RBI issued digital currency and the testing proof of the concept. And the emergence of cryptocurrency like bitcoins have actually led central banks around the world to develop a research agenda around digital currencies, both private and in sovereign. So what are the various issues relating to digital coins? The first one is the design. So the report noted that it would be like an e-cash, essentially a non-interest bearing liability of the central bank issued in digital form. And the bank can actually choose to issue this as an interest bearing instrument as well. And in fact, it would also be more consequential for the financial stability and moreover relevant to the monetary policy if the RBI were to issue it as an interest bearing instrument. And then if it is simply issued as an e-cash, it would function exactly as a physical cash functions as a physical cash functions presently, as a medium of exchange between peer-to-peer and peer-to-business transaction, between people and people to business, and as a counter-cyclical store of value, like similarly that what people do in the form of jewelry as a store of value. And then issued, if it is issued as an interest-bearing instrument, it would compete with the deposit issued by the commercial bank. So these are the possibilities of this digital currency. And then what can be the mechanisms of use? So unlike private currencies that do not have a specific issuer and essentially rely on the trust of the participations to circulate, this will create a liability on the balance sheet of the RBI, and operationalizing the CBDC would also sequentially require validation and settlement. Therefore, validation is necessary to avoid the so-called double counting problem that arises in the context of digital currencies. This is one of the biggest issues with digital currency, and the other is obviously ensuring that the payer has not already used the same currency to pay another pay prior to the current transaction. And the RBI may also develop a standard consensus procedure that determines the precise moment at which the transfer from the payer to the pay is completed. This is basically confirming the transaction, and this may involve determining the number of nodes that is necessary to validate the transfer for it to be deemed complete by the payment system participants. Now, other issue is that since RBI is the regulator of the banking system, the public choice economies would, in theory, suggest that the RBI issue a non-interest-bearing CBDC so that its constituents do not have competitive pressures to contend with. This basically means that bank would actually lose their dominant position in the payment business if individuals have direct access to the central bank's clearinghouse for a digital currency. And if you look at the examples of issuing of digital currencies worldwide, the Netherlands have issued DNB coin, Russia a master chain, and similarly in Canada, China, and UK. And if you look at bitcoins, it is a cryptocurrency and a payment system invented by an unidentified programmer or a group of programmers under the name of Satoshi Nakamoto. So this is it for today, guys. I hope you like the video. Do rate and review the course and recommend each and every video, and do your daily answer writing practice of the question given in this video at the Unacademy Discuss page. So till next video, I hope you have a good day. Thank you so much, and bye-bye.